Good morning, ladies and gentlemen. How are you all doing? Wish you a great week ahead. This is the first day of the week, 5th of October. Welcome once again to Ask Abhishekraj Daily Dose here. I'll quickly gear you up with all that you need to know in today's trading session and going forward how you should be managing your positions. So again, in this session, we are not going to discuss much of these stocks. I'll give you a view, a perspective on how the market should be shaping up, because recent few days have been a marvelous rally. Markets have given very good moves, a good positive moves. However, the volumes have not supported this kind of movement. So at this point, market is at very interesting juncture. The levels that we are very important. So I would personally advise, in case you have your positions already in the market, then you should be just following the numbers. For any fresh decisions, I'll keep you posted. Rest, let's get back to the data and see what's there in the markets for today. Starting with the fund flow, it was kind of good positive fund flow. We saw both foreign and domestic institutions buying on stocks, futures, cash, everything. But majority of the big spike that we had in yesterday's session would probably have been due to Bank Nifty calls that were written, and that reflects in the data as well. The FIIs bought about 3,380 crores of index options. Rest stock futures were sold by just a minute number of 14 crores. Stock options were bought about 112 crores. So that's also surprising, because usually the institutions would buy stock options to hedge themselves against any big fall. Rest, they bought about 1,600 crores of cash market. Domestic institutions bought about 260 crores of cash. Foreign institutions bought about 1,500 crores of index futures. Now, if you look at the indices, all the major indices were positive. All the majority that we track, that's banking, automobile, financial services, IT, media, metal, everything was positive, with banking and financial were the clear outrunners and outperformers on the Thursday's trading session. Volatility once again fell by 6%, so that's good. Now, there's one thing to know. Over the weekend, we have news coming in from Donald Trump, being tested for COVID-19. The U.S. market did react to it. Markets fell about 2%. However, by the end of recovery, it closed by negative 0.5%. So, bottom line, it was not positive. Second important thing, it's he's one of the major contestants in the presidential election. So it's a kind of ambiguity. The situation is quite ambiguous. We do not have any clarity on what's going to happen. Even his campaign manager today, this is Sunday when I'm recording this video, Sunday night. So his even campaign manager, who manages the advertisement on all the campaigns in elections, he even found coronavirus positive. So U.S. elections are pretty important from the market's perspective. So unless and until we have any clarity, I would suggest to be precautious. Rest, everything looks perfectly fine. Let's take a look on Nifty chart. Now, if you take a close look on Nifty chart, what has happened is 20 and 50 DMA now has completely converged. Any negative market in coming 1 or 2 sessions will bring the 20 days moving average below the 50 days moving average. That would be confirmation of death cross that we already have on Bank Nifty for a long time now. So I would suggest be precautious. Technically, in case the markets have to continue, in case this positive rally have to continue, I expect markets to start trading positive in first 15-20 minutes max. Rest, in case there is any kind of issue, I would suggest to stay light on positions. Nifty would be positionally positive in case it sustains above 11,550 levels. Until then, it has a support around 11,320 levels. That's where the 20 and 50 days moving average converge. Rest, RSI looks kind of sideways. It has taken support on 40, so it's most likely to stay sideways. Volumes were kind of not much with the kind of positivity we had on closing basis. So that's a deviation in the data. I would suggest stay precautious. Bank Nifty again looked positive. It closed above 20 days moving average, however took resistance on 50 days moving average. Technically, in case this positivity has to continue, we want Bank Nifty to open positive and continue trading positive. We do not want Bank Nifty to fail this particular closing level that we had on Thursday, because that's the 50 days moving average. In case resistance is confirmed, we are looking at another round of dip. So I will suggest buy back Nifty above 22,460 levels, and you could have your stop losses around 22,000. I'll correct myself. You can buy Bank Nifty above 22,460 levels with stop losses around 22,200 levels. So that's what you should be looking at in Bank Nifty. On the other indices front, Nifty view is positive unless and until it's trading above 11,320 to 300 levels. Trade, I would suggest in current levels, no trade. Bank Nifty's view is neutral to positive. You can buy above 22,400 levels with stop loss 22,250. Metal index view is negative, no trade. However, it looks like this selling intensity in metal is decreasing. A lot is going to depend on how things are shaping up on the news flows that we are going to have. Nifty IT is positive, but again looks taking resistance around 20,200 range. Either wait for a dip to buy or a breakout above this level. Pharma positive, find stock specific long opportunities. Energy view is neutral to negative. No trade unless and until we see any bullish momentum on index on the energy sector, because it already has a death cross for quite some time, so we'll avoid going longs. However, there's no anything specific negativity about the index. Nifty auto, you can short things below in case the index goes below 7,900 levels. For now, no trade, though you can find some good stock specific buying opportunities. Now, on the stocks front, as I said in the beginning of this session, we will not be discussing much of stocks. So my recommendation would be, in case you have your long positions, hold it with stop loss 11,300 on Nifty. Rest for making any fresh long positions, I would suggest, in case market takes a dip around 11,350 levels, go and buy with strict stop loss of 11,300 to 320 levels. Rest you can confirm on the real time basis. And again, on the upside, I would love to buy in case Nifty sustains above 11,550 levels. So no fresh buyings unless and until we get a closing above 550 levels. And you can bottom fish around 350 levels. In case markets close below 320 levels, it would be a good opportunity to short as well. So that would be all in today's trading session. Hope this helps you a lot in your trades. Thank you so much for watching and listening. Don't forget to like, share and subscribe. Abhishekraj signing off. Stay healthy, stay wealthy.